Welcome to TradeTheMBI.com and a tutorial on the MBI indicator itself. We're looking at a chart, this happens to be 2009, and we're looking at a paint bar study of the MBI as it is interpreted from the indicator. So let's go ahead and put the indicator up here and take a look at it. If we go to Insert Analysis Technique, we find the MBI indicator up here. We're going to go ahead and select OK down at the bottom, and as it pops up, we're going to want to scale it. May pop up on general, but you want to flip to scaling. We'll click no axis, and we'll just put it in chart 5. Depending on what other indicators you have listed, you can adjust that accordingly. And then at the bottom, you just click OK, and that's all that's required to have the indicator pop up. Now I prefer to see the readings on the side as well as have them up above here at the top. So I right click and just check that, and it pops up on the right hand side. And the readings here, colored in cyan, happens to be for the cyan line, and the green for the green line. Same readings as the numbers up here, and that would be for the current part of the chart. Anytime you want to see the reading, you just slide over the chart. Let me slide this up a little bit higher for you to see. So if you slide it up there, you will get a buy line and a signal line. The signal line is in cyan, and the buy line is in green. And in this particular case, you can see that we had an extreme reading, meaning that the cyan line dipped way down, and then the buy signal came in, and it was a little bit early in March. That was on the 4th. We still had a couple of days lower, and boom, it immediately turned around. And if you follow any of the statistics that we've talked about for the MBI and the probabilities, more than welcome to look at that on the other YouTube videos, as well as at TradeTheMBI.com. We have that on our videos. But needless to say, it becomes an interesting indicator, even particularly when you become oversold. You'll read a 70 line here in red, the magenta in 45, a 25 line, and a 10 line. Anytime you get below this 10 line, you've reached a point where you're at an extreme oversold. But as we know with markets, you can remain oversold. It becomes critical when you get the crossover and it corresponds to the MBI reading. It has to be under a very specific set of circumstances. What I like to look at the MBI indicator for is particularly when we get breaks below the red line. And when you get a break below the red line, you typically look for it to retrace to the magenta line. An early turnaround really represents a very bullish market that has very strong internals to it, and can be very valuable in seeing it. Now, it can remain overbought for quite some time, and using the shakeout indicator and the other indicators that we have that really refine within what the MBI does, you get a little bit more exacting plays with handling some of these little tiny up and down moves. But again, once you have those larger sell-offs that go below the magenta line, you look for them to retrace to the 25 reading, and it's that particular point, as opposed to thinking about selling or shorting, you start to think about wanting to buy. And depending on whether or not you see a reading that corresponds to an extreme histogram below the red line, or you have the shakeout that is moved extremely negative, that would tell you whether or not those become very interesting probabilities to enter on. But nonetheless, it doesn't change the fact that the statistics for an MBI when they come in and the probabilities for having a close within 5 days are quite exceptional. Even within that very next day. This moves all the way up to the dips that we had in late 09. And scrolling across here, you can see also you look for situations where you'll have a divergence. In this particular case, you're getting a lower reading at equal or higher price, which indicates that you may have a more extreme push to the upside. But also you look for situations where you're making a higher high in price, but a lower reading on the indicator. And that indicates you may see a little bit more of a sell-off. In particular here, you can see how price then decayed. You get an occasional pop-up close above, and when you happen to put this in correlation to the extreme histogram in that, you'll find that if you've had dips below the red line that haven't been retraced, you're likely to catch those situations. But buying that second lower close was a nice opportunity for a move higher. And you can see that once you do break above that 25 line, you usually get a fairly decent run. If you get back above that red line, this is where we start to look for crossovers, and this happens to be taking place on a weekly basis in the very current charts that we're looking at, where the green line crosses below. It's usually an indication you're about to have a little bit of a sell-off. And right there you get the cross. Next day, fairly decent dip. But even within that green setup, you still maintained solid readings above the red line. And as long as you have those, you've got a fairly decent trend intact. You can see it lasted quite a good distance here. 2010, before finally breaking down. The trend model actually broke down a little bit earlier than the MBI, and so this just becomes a corroboration of also trend beginning to build, and this is also where the trend model garners some of its data from. So it becomes very poignant in some of those little cases. I particularly like it in these short moves right here, where let me just go ahead and draw it so that it becomes very clear. You can see where we get a reading that looks particularly like this, and yet we have price doing something that looks more like that. So straight across line with price, higher readings from our MBI indicator, and merely looking for that trail signal to come back above, and fairly decent opportunity to take advantage of that for a buy setup. And then likewise here, if we draw a line going all the way across this series of peaks, you can see that price wasn't making any new highs, but yet the indicator was telling us also that each of the humps was successively lower, and that was going to lead to a pretty decent decline there. And that was part of the wave that happened. So this just gives you a little extra tool in seeing the market. You can run these at different time frames. Let me go ahead and just transfer this chart. We'll just put it onto a 5-minute chart. Just as effective. However, you have to recognize that with a 5-minute chart, your moves and probabilities for your higher swings are going to be a little bit smaller, in the sense that you're happening in a much shorter time frame, and this happens to be the very current chart of what took place in the most recent part of this data. That was on the 12th of 2012, January 27. And in this particular case, you can see that the MBI corresponds nicely to the bottoms in that, and perfect case here was equal price in that particular setup, and you end up having the MBI indicator dramatically higher even though you're at the same price. This corresponded also in the extreme histogram readings. So these kinds of little divergent setups become very powerful. You'll see them on a lot of oscillator indicators, and this is where we expanded to the shakeout and extreme histograms to give us a little bit broader sense of what happens within these types of setups, so they become very clear and obvious to us. Hopefully that helps. Continue to look for additional videos on the MBI indicator. Trade well.